Here's a word from Madhu Kela, CIO at Reliance Capital, who shares his investment outlook in an exclusive chat with Nikunj.
A lot of this money has come into India because the global liquidity situation has remained benign, or the interest rates have globally been very, very soft, and liquidity is there for asking. If all that reverses, let's hypothetically assume that the US bond yield goes to 3.5 or 4% in the next 12 or 18 months also, whenever it goes, I am saying, clearly some amount of this money will get reversed. Now, because our markets, as you said, it is only one tire which is working right now. So till then, if the domestic money doesn't come in to support whenever that sell-off happens, clearly it will have an impact.
Should an average investor wait for the outcome of election and the tapering eventually to start before they deploy money into equities? Because every time I've spoken to retail investors, some are waiting for tapering to start and some are waiting for the election outcome.
I think, Nikunj, as I said, you can keep waiting all your life. I'll give you a small story. I had a very close friend when I just started managing money. The oil prices were $30. And he was very worried because 30 went to $40. And he was waiting that let this 40 become 30 and then I will invest. The fact of the matter is that 30 became 150 and index went up from 3,000 to 21,000. So, market is never dependent on one factor. So today much hyped or much talked about factor is tapering, tomorrow it will be election, day after it will be something else. So the moot point is that whenever market gives you a chance, if supposing you are giving money to someone seasoned, if you don't have the expertise to do individual stock picking, I think over a period of time, I can thumb the table and tell you today that over a period of time, equities and an asset class has the potential to beat the other asset classes return.
Now, so no arguments on that?
No arguments on that. I'm saying if you have a time frame of 3 to 5 years, and this is what has happened even in last 5 years. Last 5 years were very challenging. You did not make any money in index also. But in spite of that, on select companies and lot of funds have delivered positive returns. Now just convert that argument for sake of saying that let's say we have a thumping majority for a party in general election and there is a decisive government which changes the overall sentiment. Do you think people will get then chance to buy equities?
So aren't markets pricing that in?
No, I don't think so. I don't think so. Markets are pricing that in because as we discussed, even though the market is looking like 20 or 21,000, but a lot of the stocks are sectors which are greatly impacted by the government policies. Whether it is power, whether it is road, whether it is infrastructure, whether it is public sector banks, they are not pricing anything of that kind.
Fair point. So where should one treasure hunt in this kind of a market? Where do you think the rate of change is going to be better? Do you think one should still stay with defensives or now it's time to go down the ladder, time to look at cyclicals and more economy related sectors and stocks?
I would say for a portfolio, it should be portfolio strategy. So you can't make a case today that I will sell off all my defensives, all my pharmas, all my IT and just be into interest rate sensitive or government sensitive.
But that's not you. You always believe in taking focus calls.
I'm just coming. No, but you asked me where should the portfolio be. I'm saying portfolio has to still be balanced. But I am saying in every sector, this is the very important point, Nikunj. If you look at every sector, we can already see consolidation happening. So the weaker guys are going away. The people who have misallocated capital, the people who went with the real big bull run which happened and did not realize that they need to change. Important thing is they did not realize they need to change. So a lot of people in the corporate sector, if I can use the word, has gone into coma. So they are alive, but there's no life left. So a lot of companies have gone away. Take, for example, unlisted company like Indigo. They declare 1,000 crore profit in an airline sector. Clearly it has come at the cost of a lot of people who have gone away. Now this is one company, though it is unlisted, can create a lot of wealth for investors as and when it is listed. So I'm just saying, making a case that this is what has happened in every business. So our job essentially is to catch these companies, which I call either are bear market survivors, which are there in every sector, and they are still available at reasonable value. You are not paying very expensive for it. So you will find them in financial services, you will find them in banks, even pharma sector, which is so overhyped. You will still find a couple of companies where your risk reward could be very favorable. So I'm saying the companies which are bear market survivors and not very expensive and can do very well if the environment improves a little bit are the ones which needs to be picked up. For sector as a whole, will I look for a lot of these companies into FMCG or into IT or into pharma? No. So lot of my companies of this will come from sectors which have not done well.
So out of the three themes which currently are prevalent, number one is rupee, second is rural, and third is recovery. You would bet on recovery?
Yeah, I'll bet gradually. I'll bet on recovery. But rupee, given our structural issue of inflation, I think it will be, in a way, wishful thinking that we expect that rupee will go back to 45 or 50 in at least in the near future. That doesn't look like the case. So you have to bet on gradual recovery, which is supported by, just to be fair, I think the government and Mr. Chidambaram has done a fantastic job, at least in the last 6-9 months, that they have brought back life into corporate sector.
But there is no evidence of that.
No, there is evidence. Obviously, there is evidence. See, things don't happen by you and I would like to believe that the mega project is starting yesterday and it will yield results today. So there is no denying to say that 3 years policy was frozen. But on an incremental basis, last 6-9 months is very heartening for policy. Take for instance the diesel and petrol hike. People still can't get into sync that diesel prices are getting hiked every month. It's been a big policy decision. Had we done this 3 years back, maybe we would not have landed in this mess.
Can equities as an asset class do well when interest rates are moving higher or they're poised to go higher and inflation is still in double digit?
No, it is the consumer inflation which you're talking about. The CPI and the core inflation which governs the policy rates is not nowhere near double digits. We're talking about WPI, which is significant portion is coming from consumer, and that portion, significant portion of that is coming from food inflation, which has nothing to do actually with monetary policy.
Fair point. But are you getting a sense that the India consumption story or the India consumer theme is now slowing down? There is inflation in the system. Job creation is a big issue. Competition only has intensified, and companies are suffering because of
clearly,
margin predictability.
In the short and intermediate term, I think it has the potential to slow down. Don't forget one thing: all this consumption boom in the rural sector also came in the wake of the significant rises which came into minimum support prices. And this year, in spite of this being an election year, we have seen a more muted rise in supporting price of wheat or paddy or XYZ cereals. So that contributed a lot to this consumption story. And other factors, what you told, that whether it is employment creation or whether it is high inflation which has persisted, will significantly lead to some curtailment into consumers. More important thing is that how do we view it in the stock market context. So when all this is happening, can you go and buy a company at 40 or 50 PE? That is what you have to decide.
So you're a bear on FMCG?
No, I'm not a bear. As I said, you will find good companies in FMCG, but will I be significantly overweight in FMCG as a sector? No. But will I say that a consumption theme is gone away and I'll make it zero? The answer may be no.
What has differentiated Madhusudan Kela from others is distinguished thinking, focus investing, and when you invest big.
Yeah.
So what is your next big idea?
See, Nikunj, again, you know that I don't talk about a stock specific thing, but as I told you, broadly speaking, look at, either new themes which are dime a dozen. Like, last 2 years, the liquor industry was a very big theme. That, someone who did not trust the management of United Spirits for years, but that stock has made 5-6 times returns. So I'm saying that in my quoted unquoted language, it was like a bear market survivor. Some change happened at the margin. So you will get a lot of these themes. There you have to be able to catch a company which is not, where balance sheet is not completely broken and fractured. That's the big point which I'm saying. I wish I could give you a list of 10 stocks, but because of compliance reasons, And more importantly, if something goes wrong in these companies, we can't come and correct that. We don't speak about individual companies. But there are dime a dozen companies in the current market at 21,000 index, wherein if you have patience and if you do your homework, you will still compound your money with a reasonable rate.
Do you think the joker in the pack could be earnings? Because ultimately for a new bull market to start, earnings also have to